Sometimes it boils down to how the market is also evolving. I mean, 2016 and 17 were a few slow years for startup funding. 18 looks to be quite good. 15 was quite good. So some of these valuations are also dependent on how the supply-demand gap sort of keeps changing. But essentially, I think what founders should realize is what sort of outcomes are they looking for, right? So you could have a social commerce or any kind of commerce business, which is, let's say, B2C, where you are approaching a population of 50 to 100 million unique users who could sort of get you, valuations of $1 billion plus, let's say, in the 7 to 10 years that you're looking to build out the business. But you may also have a consumer brand, which is, even if they have a large target market in terms of users, brand businesses, at least traditionally in India, have at least singular brand businesses have reached 100, 150 crores in size, maybe 100, 150 million dollars in terms of valuation, right? So I think entry valuations at seed stage also sort of depend on what market you're playing in and what is your business model. And it's very important to realize that every equity fund, whether it's at seed, series A, etc., is always looking to make decent amount of financial returns from that investment. And therefore, you should have a mathematical ability to look at what sort of returns are expected by these funds, and therefore where your expectations should not be out of whack. Having said that, still seed stage is very difficult because a lot of businesses that we look at are pre-product, some are pre-revenue, and arriving at valuations based on those is always a little difficult. We've sort of taken an entrepreneur-friendly approach of closing out transactions at a much faster rate, and removing the question of valuation is always helpful at this stage. So we do convertible notes with no time periods for a discount or a next round. So there's no unnecessary pressure also on the founders to sort of raise their next round very quickly, and let the founders really build out their business, get to that product market fit. The key is to always look at what sort of outcomes you're building for.